Welcome to the Deep Dive. Today, we're really digging into WeRide's Q2 2025 earnings call.
Yeah, a company right at the forefront of autonomous driving.
Absolutely. They've been making big moves globally, some really interesting tech advancements too. But the market's reaction to their results was, well, a bit lukewarm, wasn't it?
It was, and that's the puzzle, right? You've got this cutting-edge AI meeting real-world deployment, big growth numbers in some areas.
But investors seem hesitant. So our mission today is to unpack that. What's really going on under the hood, why the muted reaction, and what does it mean for WeRide and the future of self-driving?
Exactly. We need to look closely at where the revenue's coming from, what their strategy actually is, and these targets they've set. Pay attention particularly to their multi-product approach and this new computing platform they announced. That's key.
Okay, let's kick off with the headline financials then, Q2 2025.
Right.
So they reported a GAAP EPS that's earnings per share of negative 18 cents per ADR, their U.S. shares, basically.
And importantly, that was right in line with what analysts predicted. So no big surprise there on the bottom line number itself.
Right, met expectations.
Yeah.
But the revenue figure, that's where it gets interesting. Total revenue hit $17.8 million.
Which is a jump of what, over 60% year over year? 60.8%?
Yeah, a huge increase. That signals something, doesn't it? Moving beyond just testing, maybe, towards actual commercial traction.
It certainly looks that way, but let's dig a bit deeper into that revenue growth.
Okay.
The real standout, the astonishing figure, is the Robotaxi revenue.
Go on.
It surged 836.7% year over year.
Wait, 836%.
836.7, hitting $6.4 million. It's almost 9 times what it was last year.
Wow. So that segment's becoming a much bigger piece of the pie.
A huge piece. It's now 36.1% of total revenue. That's its highest share since 2021. It really shows that shift towards commercialization is happening.
Okay. Any other revenue streams growing?
Yeah, product revenue also saw a big jump up, almost 310% year over year to nearly 60 million RMB. And gross profit was up to about 40%, leading to a group gross margin of 28.1%.
So good growth on the top line, margins improving slightly. But what about the bottom line? Profitability.
Well, that's where the picture gets a bit more complicated. The GAAP net loss only decreased a tiny bit, like 1.7% to about 46 million RMB.
Only 1.7% decrease despite that revenue growth.
Right. And maybe more telling, on a non-IFRS basis, adjusting for certain items, the net loss actually increased.
Increased to how much?
To about 306 million RMB.
Oof. Why the increase?
Mostly continued heavy spending, big investments in R&D, obviously, but also just the costs of scaling up operations globally.
Okay, so spending money to make money, potentially. Do they have the cash for that?
They do seem to have a strong cash position, around 4.1 billion RMB in cash and equivalents. That gives them a decent runway,
Right, 4.1 billion. That's substantial. But it perfectly sets up that tension you mentioned earlier.
Exactly. You've got robust operational progress, fantastic growth in key segments like Robotaxi.
But the market reacts, well, cautiously. Muted.
Yeah, it suggests investors are looking at that strong revenue growth, but they're also looking hard at the ongoing losses. They want to see a clearer path, a more defined route to profitability.
This is the classic growth versus profit dilemma, isn't it? How do you value this kind of explosive growth in a transformative industry when it's still burning cash?
That's the billion-dollar question, or maybe the 4.1 billion RMB question in this case.
Okay, let's unpack that further. Let's dive into the details from the financials, what management said, their strategy. Let's try and find some answers.
All right. A really critical theme that came through loud and clear was the acceleration in robotaxi commercialization.
Right. Getting those cars out there and earning money.
Exactly. And they're doing it through, well, 2 main avenues: geographic expansion and key partnerships. They're not just growing, they're planting flags in potentially very lucrative markets.
Okay, talk about the expansion. Where are they going?
They've rolled out robotaxi services in new high-profile spots. Dubai, Riyadh, Shanghai are the latest additions.
So that brings their total footprint to
10 cities globally now, and they're claiming they operate the largest public commercial robo-taxi fleet outside the U.S. and China.
That's a big claim. But what does it mean on the ground? Are these full-scale operations or still more like pilot programs? Does it actually move the needle for investors worried about those losses?
That's the crucial question. Let's take the Middle East, for example. It's clearly a massive strategic priority.
Okay.
In Abu Dhabi, they've actually started driverless testing, not just safety driver testing, but full driverless.
Wow. Already.
Yeah. And they're anticipating a commercial driverless launch there, pretty soon in the coming months.
Okay, so that's moving beyond pilot stage. What about Dubai?
Dubai, testing is underway. They expect a pilot operation later this year, aiming for full driverless service next year. So it's phased, but the goal is clear, full commercialization.
And they have partners helping with this.
Absolutely. The Uber partnership seems huge. They said it's tripled the WeRide Uber fleet globally in just 6 months.
Tripled.
Yeah. And in Abu Dhabi, that partnership now covers about half the core city area, including major highways, the airport. That's a significant operational footprint, not just a demo.
Okay, Abu Dhabi, Dubai. What about Saudi? You mentioned Riyadh.
Right. They partnered with the Saudi Transportation General Authority, launched the kingdom's first ever Robotaxi pilot in Riyadh.
First ever. That's significant.
Definitely. Covering key spots like the airport. And back in China, they launched in Shanghai, partnering with Chery and a local taxi company, doing city tours initially.
So a very wide geographic net.
Extremely wide. And they make a point of saying they're the only company globally with autonomous driving permits in 6 different countries, operating products in over 30 cities.
That's impressive reach. And they mentioned mileage.
Over 14 million kilometers of real-world autonomous driving logged.
14 million.
Yeah.
And the safety record.
This is pretty remarkable. They maintain a 0 regulatory discipline record due to system failures over more than 2,200 days of public operation.
0 issues leading to regulatory action in over 2,200 days.
Yeah.
That's actually really impressive for this tech.
It really is. It speaks volumes about their system maturity, or at least their operational caution.
So when management gives guidance like hundreds of vehicles in 2025 and potentially thousands by 2026, does that safety record give them confidence they can scale that fast?
I think it has to. That guidance points to a huge step up in scale. Obviously, it depends on getting more permits and securing capital.
Right. Always the caveats.
Always. But that track record definitely helps conversations with regulators. Going from hundreds to potentially thousands in a year signals very aggressive ambition.
Okay, so the global ambition is clear, the safety record seems strong, but what's enabling this? You mentioned a new computing platform.
Ah, yes, the HPC 3.0 platform. This is where it gets really interesting technically.
HPC 3.0. Developed with Lenovo, right? What's the big deal? They threw around a number like 2,000 TOPS. What does that actually mean?
Right, 2,000 TOPS tera operations per second. It's a measure of AI computing power. And 2,000 is a massive amount. It's powered by dual Nvidia Thor chips.
Nvidia Thor, okay.
Basically, it provides the immense brain power needed for true level 4 autonomy, where the car handles everything in defined areas without needing a human driver.
So more power enables better driving. But what's the real impact for WeRide as a business?
2 things, mainly. First, the cost. They call HPC 3.0 a game changer because it cuts the manufacturing cost of the autonomous driving system by up to 50%.
50%, half the cost.
Up to half. That is critical for moving from expensive prototypes to mass production. It fundamentally improves their unit economics, which investors definitely want to see.
It's huge for scalability, and it's already in use.
Yeah, integrated into their GXR Robotaxi. They claim it's the world's first mass-produced L4 vehicle using those Nvidia Thor chips.
Okay, cost reduction is one impact. What's the second?
User experience and capability. That extra power enables features like free pickup drop-off, PUDO.
PUDO.
Yeah, instead of just going to fixed stops, the Robotaxi can navigate tricky last-mile bits to meet you exactly where you are, within permitted zones, of course. It's a big convenience improvement.
Makes sense. And it's built to last.
Full automotive-grade platform, designed for a 10-year lifespan, rigorously tested against standards like ISO 26262 for functional safety.
Okay, HPC 3.0 is a big step. Anything else on the tech front?
They also unveiled a next-gen Robotaxi, the CR with Chery, ready for mass production, built with 5-layer redundancy and key systems for extra safety.
5 layers of backup.
Pretty much. And they're leaning heavily into new AI models like visual language models, VLMs, building their own end-to-end architecture for the L4 fleet, trying to make the system understand and react more holistically.
VLMs, like the models that understand images and text. How do they train those for driving?
Well, they developed something called Genesis.
Genesis sounds ambitious.
It is. Think of it as a super advanced simulation platform, generative engineered neuro environment for simulated intelligence in self-driving.
Okay, break that down.
Basically, it can digitally reconstruct real cities very quickly, then run simulations of countless scenarios, including really rare stuff, extreme weather, you name it. It uses generative AI to create vast amounts of training data.
So they can train their AI, especially these VLMs, much faster and on more diverse situations than just real-world driving alone.
Exactly. It makes the system more robust, helps iron out weaknesses without needing millions more real-world miles for every tricky situation.
Okay, the tech sounds impressive, genuinely cutting edge, but let's loop back to the business side and those losses. How does all this tech translate into a sustainable business model?
Their core Robotaxi model relies heavily on partnerships. Deep ones, what they call win-win.
How does that work?
WeRide focuses on what they do best, developing the L4 autonomous driving tech, the brains. Their partners bring expertise in things like fleet operations, vehicle maintenance, managing the customer marketplace, customer service.
So a division of labor. WeRide does the core tech. Partners handle the operational complexity.
Pretty much. It's smart. It lets them get to market faster and builds a more scalable ecosystem than trying to do absolutely everything themselves.
And we saw examples like Uber, Steer AI in Saudi,
Yeah.
TX AI in the UAE.
Exactly. The Uber deal wasn't just about investment. It apparently gave them a blueprint for entering international markets. These local partnerships are key for navigating regional specifics.
And how do they actually make money from robotaxis?
They talk about a triple growth engine. It starts with hardware sales, presumably selling the equipped vehicles or the AD systems.
Okay, initial sale.
Then, as operations ramp up, they move into service revenue. And finally, potentially revenue sharing with partners once the service matures and becomes profitable.
And they're targeting specific markets.
Yeah, they emphasize focusing on markets with good unit economics, where they can charge a higher price per kilometer. That helps offset those initial high costs.
Makes sense. Now, one thing that seems different about WeRide is this multi-product strategy. Robo-taxis, but also vans, buses, sweepers. Is that smart, or are they spreading themselves too thin?
It's definitely a unique approach compared to some competitors who are purely focused on robotaxis. They call it the one platform approach.
WeRide One. Right.
Correct. The same core autonomous driving platform powers all these different vehicle types.
What's the advantage there?
Well, a key point they made is data. It gives them access to a much wider pool of high-quality data from diverse operating conditions.
How so?
Think about a robo-sweeper or a robo-bus. They operate at different times, different speeds, maybe in different areas or weather conditions than a robo-taxi might typically encounter.
Okay. So data from the sweeper might capture some weird obstacle or road condition that helps improve the robotaxi's perception.
Precisely. It helps them capture those rare long-tail corner cases more effectively. That cross-pollination of data across vehicle types is potentially very valuable for improving the core system faster.
Interesting. Any other benefits to this multi-product thing?
Flexibility in market entry. Not every city or region might be ready for full robotaxi services immediately, either due to regulation or infrastructure.
Right.
So maybe a robo-bus operating on a fixed route is an easier first step. It introduces L4 autonomy, builds public trust, helps regulators get comfortable.
Kind of like a stepping stone.
Exactly. It lets them leverage their core tech, gather data, build relationships, even if robotaxis aren't feasible there yet. Plus, their CEO is actually on Singapore's AV steering committee.
Really? So they're actively involved in shaping the rules.
Seems like it. Proactively helping shape regulatory frameworks in key markets is part of the strategy.
Okay, so this multi-product, one-platform approach gives data advantages and market flexibility. But the competition is fierce, right? Waymo, Cruise, Tesla's FSD aspirations. How do they realistically compete?
They position themselves based on, well, a few things. Proven safety and reliability, that's zero discipline record. Scalability enabled by HPC 3.0's cost reduction. Adaptable tech, and that partnership model.
And they mentioned doing both ends. What's that?
Right. They're developing systems ranging from advanced L2++, like sophisticated driver assist for mass market cars, all the way up to dedicated L4 robotaxi fleets. Gives them a broader potential market than just robotaxis alone.
But global deployment must have huge challenges, even with good tech.
Oh, absolutely. They highlighted two big ones. Market adaptation and compliance.
Adaptation meaning?
Making the tech work reliably everywhere. Extreme heat in the Middle East, different road markings, constant construction zones. The system has to handle it all. They use robust models, local data collection, and that Genesis simulation system to tackle this. It's very hands-on local tuning.
And compliance. That's the regulatory hurdle.
Exactly. Every country, sometimes every city, has different rules or timelines for autonomous vehicles.
How do they manage that patchwork?
By being early movers in many places, trying to help shape the rules, as we mentioned, following the phased regulatory paths carefully, and crucially, prioritizing data privacy and localization.
Meaning keeping data within the country.
Yes. Ensuring all operational data stays within its country of origin. That's huge for gaining regulatory trust. They see this localized, hands-on deployment experience as a key advantage over rivals who might try a more centralized approach.
Okay, so we've covered the global push, the HPC 3.0 tech, the partnership model, the multi-product strategy, the competition. Let's bring it back to the investor perspective. You're looking at WeRide after these Q2 results. What are the key takeaways?
I think the first big takeaway is that pivot towards real, measurable commercialization. Robotaxi revenue isn't just theoretical anymore. It's soaring and becoming a significant part of the mix.
That 836% growth, yeah.
And the HPC 3.0 platform is genuinely critical. That cost reduction fundamentally improves the long-term potential for scalability and better unit economics. That's a major positive signal for the future.
And the global expansion, especially the Middle East.
Strategically vital. They're tapping into markets with potentially supportive regulations and huge potential demand. Think about Saudi's Vision 2030 goal, aiming for 25% autonomous driving penetration.
25%. That implies
Tens of thousands of autonomous vehicles potentially needed just in that region. The scale of the opportunity there is immense if they can capture it.
But we come back to the market reaction. Cautious, you said.
Ah.
Stock dropped after earnings.
It did. Despite the operational highlights, despite some analysts being quite bullish, the stock fell notably in the days after the release. There was even some high put option activity flagged beforehand, suggesting some hedging or bearish bets.
So why the disconnect? Good news operationally, cautious market.
It really highlights that tension. Management is focusing on the rapid scaling, the tech wins, the global footprint. But investors, it seems, are still focused on the bottom line. They want more clarity on contribution margins as robotaxis become bigger, and those ongoing net losses are clearly a concern.
How long can they keep burning cash before the market demands profit? That's still the overhang.
Precisely. So looking ahead, what should investors watch?
Key catalysts, right? What could move the needle?
Definitely further regulatory wins. Big permit expansions, especially full driverless commercial permits in places like Abu Dhabi or Saudi. Milestones from the Uber partnership hitting those fleet numbers.
And the next earnings report, probably late November, December.
Yeah, that'll be another crucial checkpoint. And, broader trends in AI and automotive computing could lift the whole sector, including WeRide.
Okay. Now for the part everyone enjoys, let's shift gears to our This Is Not Financial Advice segment. Time to pitch some outrageous but plausible trade ideas, hedge fund style.
All right, let's speculate. Given everything we've discussed, the Middle East push, the Saudi goals, but also the market punishing the stock for current losses, there's definitely an interesting divergence to play with.
Okay, idea number one.
How about a long strangle, betting on those regulatory catalysts?
Explain the thinking. Long strangle. Buying calls and puts.
Exactly. Buy out of the money calls, buy out of the money puts, maybe expiring late 2026. The rationale is simple. Big regulatory news is often binary.
Either happens or it doesn't.
Right. If they land a major driverless permit in Abu Dhabi or Saudi, or announce a huge fleet expansion, the stock could gap up significantly. The calls pay off.
But if there are delays or setbacks,
then the stock could drop sharply and the puts pay off.
Yeah.
The strangle profits from a large move in either direction, betting that the current indecision won't last, especially with that potentially thousands by 2026 guidance hanging out there. Hit that. Huge upside. Miss it, potential downside.
So you're betting on volatility around those key binary events.
Cool.
Interesting. Okay, trade idea number two.
A pairs trade. Long WeRide, short cars ETF. This is more contrarian.
Long WeRide short cars. Cars being the broader EV and autonomy ETF. Why?
Well, Cars has thumped WeRide recently, year to date and over the last month. WeRide has significantly underperformed the sector.
Okay.
The bet here is that WeRide's specific positive catalysts from Q2, the real commercial traction, the HPC 3.0 impact, haven't been fully digested or appreciated by the market yet, given the initial negative reaction focused on losses.
So you go long WeRide, expecting that underperformance to reverse as the market sees the real traction beyond demos.
Exactly. At the same time, you short Cars. Maybe the broader sector rally is overdone and due for a pause, or maybe WeRide's specific story will just shine brighter relative to the average company in the ETF soon.
So you're isolating WeRide's potential alpha against the sector beta, capturing the value if the market reevaluates WeRide's execution.
That's the idea. Betting on WeRide's specific story to outperform the general sector trend in the near term.
Two interesting speculative ideas there. So wrapping things up on WeRide's Q2.
Well, the call definitely showed a company making serious progress, commercializing robotaxis, expanding globally, pushing the tech forward. They are executing.
No doubt about the execution on those fronts, but
the market's immediate take suggests those profitability concerns and the need for clearer financial guidance are still very real. The next few quarters are critical. Can they hit those fleet targets? Can they secure the big regulatory wins? That's what will likely sway investor confidence.
it leaves us with that fundamental question, doesn't it? As this whole autonomous driving space matures, how does the market balance impressive tech leadership against near-term profitability? Especially for a company like WeRide that's pushing boundaries so hard.
It's a balancing act, and the scales might tip back and forth for a while. And remember, everyone, this discussion, especially the trade ideas, is purely for informational purposes. It is absolutely not financial advice.
Definitely not. Please, always do your own research and due diligence.
Couldn't agree more.
Well, that's all the time we have for this deep dive. Thanks for tuning in.
Yeah, thanks for joining us.